Good evening, girls. Good evening, class 12. Children, continuing with cash from operating activities, I hope you must be doing the questions of cash from operating activities. Good, girls. Now, following with cash from operating activities, I found that there are certain things, children, that you should remember while you do the questions for CFO. The questions for CFO, the first thing that you should remember is the payment of employees' salaries, bonus, or any other type of staff welfare expenses will always be operating. Yesterday, children were getting confused. Anything which is related to running of the business, I discussed with you, the staff is contributing in running of the business. So whatever is paid, even if not in cash, it is bonus. No, it should be in cash, sorry. It should be in cash. When bonus is paid, it is for the staff welfare expense, and any payment that is done for staff welfare expense contributes in running of the staff, running of the business, as maintenance of staff is contribution to the business. So it is always operating. Next, purchase of any type of tangible or intangible fixed assets. Any type of tangible asset, building, plant, machinery, patent, copyright, goodwill, any type of purchase of fixed asset will always be investing. Then, payment of interest or dividend. Remember, I told you receipt of interest and dividend will be investing. Payment of interest or payment of dividend is always financing. Then payment of installments. Yesterday somebody asked me installments. I told you, children, here I've detailed this out here. Payment of installments, whether in case we are making the payment for hire purchase, we bought something, the principal amount is always investing. We have purchase a fixed asset. Even if it is on hire purchase system, the principal amount that has already gone in form of cash, it will be investing activity, and the interest on it will always be financing. The interest on the installment that has been paid will be financing. Okay. Next, the inflow or outflow between components of cash and cash equivalent. It is very, very important to note for the preparation of CFS, children. Any type of inflow or outflow in between, that means within the cash and cash from the cash equivalents, either it is cash purchased, marketable securities purchased, so that is cash equivalent. Cash deposited in a bank, that is cash equivalent. So movement between cash and cash equivalent will not be considered as a movement, as flow of cash. It will not be considered in preparation of CFS. Then bonus shares. It is the payment of bonus shares where the bonus shares have been given, they have not been purchased. Bonus shares have been given in due of shares. So it will be no flow of cash. Issue of bonus shares will be no flow of cash. That will not be taken in the making of CFS. Right? Okay. Next, children, we always remember the cash flow. When does the cash flow? The flow of cash is taken only, or the cash only moves from a cash to a non-cash category, or vice versa. Only then we considered cash to flow. That is what I just told you. Cash to cash category or cash to cash equivalent will not be considered as flow of cash. So either inflow or outflow. The flow of cash will be considered when the cash moves from a cash to a non-cash category, or non-cash to a cash category. Like purchase of fixed asset. Fixed asset is non-cash. Cash is going out, fixed asset is coming in. So that means that will result in flow of cash. Now here I have given examples and categorized them for your convenience into cash flows, inflows and cash outflows. Like cash sale. Cash sale The sale of goods are going out, cash is coming in, so it is inflow of cash. On the contrary, cash purchases, goods are purchased and cash is flowing out, outflow of cash. Then cash received against trade receivables. Trade receivables, cash received against trade receivables. Trade receivables are getting generated and cash is received for them. So cash is received, cash receivables are getting diluted. They are getting received and cash is getting cash is coming in. That is inflow. That means debtors have paid now. Receivables have made the payment. So that is inflow of cash. On the contrary, cash paid to trade payables will be outflow of cash. Then cash received from commission or royalty. Cash is getting received from commission or royalty. You understand the meaning of commission and royalty? Either commission or royalty means publication of a book. I write a book, not publication, but I author a book. I am writing a book. So for the script, I will keep getting royalty. So I am getting cash against that. That is inflow of cash for me. I am a script writer, an author. And then operating expenses, any type of operating expenses, whether they are administrative, selling or distribution expenses, they will be cash outflows. Then insurance claim received. Whenever we receive a claim, it is inflow of cash. That is inflow. I'll just take the inflows first. Cash received from sale of investment. Cash is getting received, inflow. Cash is received from sale of fixed asset, inflow. Cash is received from sale of securities. That means your securities. We have not yet categorized them as operating, investing or financing, children. We have just sorted out whether it will result in inflow or outflow. Wherever we are selling something, that is always inflow. Then loans and advances received. You are taking up loans. That is inflow. Proceed from issue of equity shares, inflow. Proceed from issue of preference shares, inflow. Proceed from issue of debentures, inflow. Wherever cash is coming in from all these sources. These are the sources of inflow of cash. Then comes the examples of outflow, the sources of outflow of cash. It can be, I told you, cash purchases, cash paid to trade payables, operating expenses, cash purchase of investments other than marketable securities. Remember, cash purchase of marketable securities will not be taken. Why? Because marketable securities are cash equivalent. So cash to cash equivalent will be no flow. Cash purchase of fixed assets, outflow. Purchase of assets, it will result in outflow of cash. Loans and advances paid, loans given or advances made to somebody, payment of cash, application of cash. Loans and advances repaid, outflow. Payment of buyback of equity shares. You have issued equity shares and now with enough funds available, you are buying back the shares that you have issued in the open market. You yourself are buying your shares that you have issued. That is called buyback of shares or maybe payment of shares. It will be outflow of cash. Payment for redemption of preference shares, outflow. Payment of redemption of debentures, outflow. These all are outflows of cash. So what is cash flow statement? Now we will start with cash flow statement, the statement that will show the flow of cash or cash equivalent during the period under report. Only for one particular period, the flow of cash, outflow or inflow of cash will be stretched here, will be taken down, reported here, classified here in this statement called CFS. This is CFS. Now we move to some unsolved questions. Here children, this is question number 7 I have taken here. Question number 7 from your textbook. Calculate cash from operating activities from the figures that have been given. This is your textbook question. Depreciation of fixed assets have been taken. Amortization of goodwill has been taken. loss on machinery, on the sale of machinery, and profit on sale of land. And then there is additional information given about the working capital changes. Now let us start the question. The question always begins with NPBT. I told you 4 steps to begin the question. Yesterday I discussed with you. The question will always begin with NPBT. NPBT as given in the question is rupees 2,50,000. 2,50,000 plus depreciation. All the non-cash and non-operating activities are being added. Depreciation on fixed asset, amortization of goodwill plus 5 lakh plus 5,000 plus loss on sale of fixed asset minus profit on sale of fixed asset minus we will get cash flow from operating activities, but before the working capital changes. I have calculated, it comes to 21,69,000 minus the trade receivables. Trade receivables have been given 22,000 to 23,000. Trade receivables are increasing. Increase in trade receivables will be minused. Then trade payables 15,000 to 10,000. Fall in trade payables also minus. Prepaid expenses 6,000 to 4,000. Prepaid expenses, current assets are decreasing. Decrease in current assets is added. Prepaid expenses will be added. Fall in current asset added rupees 4,000. We add 4,000 to 21,69,000. Subtract this 4,000. It comes to net cash from operating activities is 2,65,000. Are we clear? Okay. Then next question I found, next good question is question number 11 from the textbook. This is the question. Cash from operating activities from the following figures. This is the question, where profit and loss balance is rupees 60,000 to 65,000. Last year was 60,000. By the end of this year it is 65,000. That means this year's profit is 5,000. We begin with this. This year's profit is 5,000. See here. We begin. Then we start with all those 4 items for NPBT. With 4 items for NPBT, the transfer to remember those 4 items. Now with this I cannot ask you, in the live classes I've got used to asking. Yes, interim dividend, the provision for taxation, transfer to reserves, those 4 things. It gives us the transfer to reserves. From all those 4 things, only one thing has been given, that is transfer to reserves. That is rupees 35,000. That gives the NPBT, the net profit before taxes is 40,000. NPBT 40,000. We will add the non-cash items and non-operating items. There is none. Given here, there is none. General reserve, salary outstanding, wages prepaid, goodwill, cash and bank balance. So none. Non-cash item is not given. So we get here operating profit before working capital changes. To this we will make the working capital changes. The working capital changes I can see in the question is only for trade receivables. The working capital changes, trade receivables from 1,49,000 they have gone to 1,53,000. So increase of 24,000 minus 24,000. Net cash from operating activities comes to 26,000. Clear? Here I have made the working capital, the rough working also for the working notes for the increase in transfer, the reserves, trade receivables, decrease in outstanding salaries, prepaid expenses, prepaid wages, all those. These things have been worked out, and here the answer comes to 26,000. Right? Now next children, now this is the question which I have done for you. You will have to, children, do not skip any question, because I cannot solve all the questions here and forward to you. These are some different questions that I found I am doing for you, so that you get a catch of it, how to proceed. You are supposed to update your notebooks with all the questions. following is the position of current assets and current liabilities. This is question number 13. Creditors, debtors, BR, short-term loans, provision for bad debts, goodwill, and bank overdraft has been given. And the catch of the question is the company incurred a loss of rupees 37,000. There's a loss of rupees 37,000. You have to calculate the cash from operating activities. Now let us proceed. We calculate the NPBT. NPBT has been given here, 37,000 loss. Loss, I have bracketed the loss here. You can bracket or write the minus sign as comfortable. Bracket avoids confusion. Minus sign sometimes in calculation can be taken as decimal, or sometimes taken as is equal to sign. Sometimes may not be read properly either by you, that results in an error, or by the examiner sometimes. So it is always safer and advisable to bracket the negative items. Then we add the all those things that have to be added. Increase in creditors, the working capital changes. There is no non-cash and non-operating expense there. From the working capital changes, increase in creditors and decrease in debtors will be added. Decrease in, then the subtracted, increase in the receivables and decrease in the liabilities will be subtracted. That is 5,000 and 3,000 subtracted. Cash operating activities results to be rupees 30,000. Right, girls? One more question I've done. The next also, 14th, I've done for you. I don't know, girls, that sheet has flown away somewhere. I have done that question also. I'll send you the pic of 14th question. Question number 14 also have been solved. I've done that also. Now you are supposed to solve, that is with additional information. Children, with the questions of additional information I told you, we will proceed. We just have to take care of when does the debenture. They have given us the additional information about debentures. Debentures were issued on 1st April 2017. And additional investment was made on this date, 1st April. So when we calculate the interest, or when we calculate the dividend, at that time we have to take care the debentures here. See here, you can see debentures have been issued. They tell here, the long-term borrowings. Here the long-term borrowings. See, children, this is the question of Himalaya Limited, 14th in my textbook. Let us do this question. Chalo, I'll do it again with you. This is question number 14. See here, children, NPBT now. First we calculate the NPBT. The first step is always calculating the NPBT. Now here in this question, you can see here, children, the NPBT. In this question, the net profit has not been given separately, but they tell us the profit and loss. When the net profit is not given to us, we have to see the profit and loss balance. Here the profit and loss balance has been given here as 50,000, and it is minus 20,000. In the last year it was loss of 20,000. This year it is profit, in the end is showing 50,000. That means the company must have made the profit of 70,000, out of which it adjusted the loss of 20,000, and still a profit of 50,000 is remaining. The company, I repeat, in case there was a loss in the previous year, 17, there was a loss of 20,000. This year's balance sheet is showing a profit of 50,000. That means this is till the end. The P&L statement is showing a profit of 50,000. That means the company must have made a profit of 70,000 and covered the loss of 20,000. Still it is showing a balance of 50,000. So we begin here. The question we begin with NPBT rupees 70,000. Then there is, I can see here the transfer. Just above that is the transfer to reserve. Transfer to reserve, the transfer to general reserve is rupees 20,000. That gives us 90,000. Now we start with the non-cash and non-operating items. Non-cash and non-operating, the first thing will be interest on debenture, rupees 13,500. Then depreciation, this is plus. Then plus depreciation will be added, rupees 40,000. Then minus interest on investment is received. Interest on investment, rupees 4,000. And what is this interest on investment? This is that 8% on rupees 50,000. 8% of 50,000. This interest on investment. And depreciation. The depreciation has been given 40,000 depreciation has been given, and 8% that is 8 interest on investment is 8% on 50,000, and depreciation is what is how do we get 40,000? That is rupees 1,50,000, the balance that has been given minus the last year's balance, minus 1,10,000. Now I cannot hold my phone and keep doing it. That is rupees 40,000. So we get here, and to this now we have to add. I'm just making the totals together. You will find this here, and then you will add the working capital changes. The working capital changes will be receivables. The trade receivables will be added here, rupees 31,000. The trade payables will be subtracted with rupees 20,000, and you will get the answer. This will be the net cash from operating activities. The net cash from operating activities. Are we clear with question number 14? This is question number 14. Now after this you will do one more question I can do with you. Question number, let us take 15. No. 15, let us see, 16. Additional information. Okay, let me do 16th for you. All the children, I'm just sending you, I'll solve and I'll send you the pick for 16th. And then till there, from operating activities, we are supposed to do all the questions of operating activities. I will start with investing activities tomorrow. Here children, question number 16 in the textbook. The RFO has been given here of Z Limited. The balance statement of P&L of Z Limited, where sundry creditors have increased. Additional information has been given here. Sundry creditors have increased by 40,000 during the year. Sundry debtors have increased by 70,000. You know what to do with increase in creditors, increase in liability is added. Decrease in debtors, sundry debtors, increase in debtors will be subtracted. Outstanding wages, decrease. Outstanding liability is decreasing payment. So 10,000 minus. Bill receivable decreased plus. Prepaid expenses decreased plus. All these things, working capital changes, and we have been asked to calculate the cash from operation. Let us now start the question. Okay, Z Limited. Now let me start the question for you. The NPBT here, profit before tax is given as 8 lakh. The NPBT is rupees 8 lakh. 8 lakh. Now we have to add the non-operating plus the non-cash and non-operating expenses. We are adding the non-cash and non-operating expenses. We are adding depreciation will be added plus rupees 80,000. Nothing else. Non-cash and non-operating, nothing else. This comes to 8,80,000. Now we will make the working capital changes. Working capital changes. Now what will be plus? BR will add rupees 5,000. Then prepaid expenses will be added rupees 20,000. Then creditors will be added rupees 40,000. This gives us a total of 9,45,000. Now the items to be subtracted minus. Now what will be subtract? First is debtors, rupees 70,000. Increase in debtors 70,000 subtracted. Then there is drop in outstanding wages. Outstanding wages 10,000. Then inventories, I can see drop in inventories rupees 1 lakh. Now we will find out the net cash from operating activities. To this 9,45,000 we will make these changes also, and this will be the cash from operating activities, CFO. This is the cash from operating activities. Right, girls? Now we have done these questions. That means we have done the cash from operating activities. Now tomorrow I will start with cash from, not tomorrow, Monday I will start with investing activities. By then you're supposed to be prepared with all the unsolved questions. 3-4 unsolved questions I've done with you. Remaining you prepare. You update your notebooks. Okay, girls? Bye-bye.